you get this much LPs, many LPs and GPs in one place.
Right.
What's the number one thing people are talking about here today, this year?
This year, I think lots of things. The markets are open. Lots of tech companies are going IPO. Some of them not performing terribly well in terms of maintaining the IPO price on the market. So a lot of people are asking how long this window is going to be open for.
What doesn't seem to resonate is not a lot of people are used to this sort of environment. I mean, the public markets have been spoiled for about 10 years, easy money from the Fed and all these things. The markets have been generally good. Is there a sense that people are changing their exit strategies or putting it off for now while things remain uncertain?
I don't think so, not at the moment. I think things may change in the new year or a little further out. But for the moment, I think because the public markets are accepting of tech IPOs in particular, I think we will continue to see quite a few companies go that route in terms of exits.
Right. So you guys are primarily focused on tech.
Yes.
We were talking during the break. They're one third China.
Right.
1/3
Southeast Asia,
and the rest of the world.
That's right.
Why is it structured that way? Was that on purpose?
Yeah, so you know, we saw a transition basically in venture investing in Asia, which is where our roots started, and that transition is really a shifting of gears from consumer-centric investments to more tech-centric investments, and because you know tech and innovation is a global phenomenon, we decided to take the plunge and say we really need to look at the best-of-breed technologies from around the world. Before we are comfortable making decisions and bets here in Asia. So really what we are about today is taking best-of-breed technologies and helping these companies in the markets that we understand the best, which is China and Southeast Asia.
Do you find certain technologies better in some places than in others? I'm curious.
I think we do see concentrations of technologies coming out of certain areas. Generally, tech out of the San Francisco Bay Area is very, very strong.
Okay.
In Israel, you have quite a bit in sort of machine vision and big data. So you do see concentrations in San Diego, Boston. You sort of see a lot of the life sciences, but I wouldn't say there are gems lying across the world, right? And
what are you guys busy looking at right now? What excites you the most? Don't tell me AI, or is it still AI?
I think AI is really exciting. I think there's a lot happening in the space. We have only begun to scratch the surface in terms of the possibilities. I think what lies below the surface is really where the gems are. We're also very excited about life sciences. The recent decade or so, we've gained a lot of understanding of how a lot of the science as to how the human body works. So we see an opportunity that from a risk-reward ratio perspective, to go in at this particular stage.
And as you'd be able probably to speak to this best because you look at both China and Southeast Asia.
Right.
I mean, the reason you have a hotbed of just these large tech companies in China is because there's a perception of scale.
Right.
You can scale the market. Southeast Asia is a little bit smaller than China combined,
right.
But you also have to look sort of granular and individually these countries,
right.
Which the disadvantage to that is you don't really get a lot of sort of cross-border champions, if you will.
Right.
I mean, Grab and Gojek are, I guess, the exceptions to that rule. How does that change the way you look at Southeast Asian companies? Because you look at them through the prism of a China sort of investment prism.
I think China obviously as a market on its whole, India has that type of skill as well. And you're right. I think Southeast Asia is a market where it is a bit more fragmented. There are certain countries within Southeast Asia, Indonesia for one, Vietnam for another, that have enough scale to support a company on its own. But generally, I think our approach is really to look for technologies and for companies that are able to straddle that geographic and cultural divide, right? So in business models that have a strong cultural link and that's tied to a very specific cultural, very often those are deals that we find a little bit more challenging to do due to market sizing. But there are companies that actually are able to travel well, for lack of a better word.
And what sets those companies apart? So in other words, what makes Grab, what makes Gojek, and what makes some of these natural champions scaling up difficult for them to get out of their own home countries?
I think there's some very generic technology-based issues and demographic issues that I think that these companies have in their markets have in common. So if you're able to address those, the companies should travel well. But at the end of the day, it's all about execution. It's all about the team and their ability to execute and to be able to manage a business across a wide geographic area.
We see the amount of attendees here, just how much activity. There's a lot of money that's really been allocated towards PE, VC, what have you, and there seems to be a crowded element to it. But equally, do you think there's an underappreciation of just the potential of technology? I know that's a very fluffy question, but is there enough for everyone, essentially, to go around, in your view?
Enough capital?
Yes. Is there too much capital?
I think the challenge is not whether there's, because you ask the funds who are raising capital, they say there's not enough capital to go around. You ask the guys deploying capital, there's too much competition to deploy capital. I think it's an issue of finding the right match and finding the match between LPs and GPs, the match between funds and startups, that if there is a suitability factor. So I think that's the challenge, the matching prospect.
And just very quickly here, do you think the big private companies are staying private too long? Just because because capital's being thrown their way all the time.
I don't think they're staying too long. I think it is a fact that companies are staying private much longer, and I think that reason is because that private capital is able and willing to look at more the long-term value in some of these companies. I think the fact that some of these companies take a longer time to gestate and to prove their market worth is the reason why this, but I don't think it's staying too long.